Everything I've explained up to this point played a pivotal role in what led to the collapse of this bank and poses great risk to our entire financial system. Let's get into the government response and how it will affect you. First, I'd like to start with some clips. The clips I'm about to show you are from a meeting the FDIC held in November of 2022.
I'd also like to remind participants that the meeting is public and is being live streamed.
Obviously, the failure of a domestic, systemically important financial institution would be quite challenging.
This is the first time that we're discussing a large bank resolution. Significant challenges that are posed by what are sometimes referred to as regional banks.
Do we have the capability to deal in a timely way?
It still may be highly costly and result in significant disruption to local communities and potentially to the wider financial system, especially if it occurs in the context of a wider economic downturn.
Because we're dealing with a society where people are getting their information in tweets. There's just no patience, I think, for going through the elaborate and careful planning that has gone on.
It's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. You can tell whether people understand who's going to be protected, who isn't going to be protected.
I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank?
I do want to go back to something Jay said about stabilizing statements. In my experience, they're not stabilizing. If you have to make a stabilizing statement, you're in real trouble.
Americans can have confidence that the banking system is safe.
You've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do.
First off, the FDIC had $128 billion at the end of 2022 in their deposit insurance fund. It will draw from that fund to pay depositors who want their money. To recoup those losses, FDIC will have to impose higher fees on banks. And if banks have to pay higher fees to recover the fund, you better believe that rates will be passed on to us, the taxpayers. SVB had nearly 94% of the accounts over that amount. The rest of the money came from the Fed through something called the Bank Term Funding Program. It allows banks to take loans from the Fed for up to 1 year by trading some of their assets, mainly treasuries, agency debt, and mortgage-backed securities. There's a couple of problems with this. 1. Bonds that were purchased by the banks years ago should be worth a lot less right now, based on higher interest rates. But the Fed's program tells the bank, you know what? You can give us those bonds and we'll magically make them worth more so you can get more cash for your assets. That's what's meant by these assets will be valued at par. If you could trade your debt for more money than your debt is worth, wouldn't you want to do that? Number 2, the stated interest rate on these loans is not publicly available. I'm assuming it's low. Is it near 0%? The actions of the Fed in the past lead me to believe they very well could be. Are the banks getting free money again? Number 3, what happens when the loan is up? Can the bank just roll them over indefinitely? Number 4, who's to say these banks don't just take the loans and use it for themselves? Evidence will suggest that banks, when given the opportunity to make money over helping the economy, they'll pick making more money every time. Number 5, where's the fiscal policy to help direct this money to the right hands and to prevent banks from taking it if they don't need it? The government needs to do more. Number 6, $300 billion was just put back into the system to help cover any potential runs on banks. We're fighting inflation here, and everyone is yelling at the Fed to stop or pause because it could break something else. Yet the risk of inflation spiraling out of control is high. The poor and middle class pay for that more than anyone else. Number 7, the actions of the Treasury, Fed, and FDIC encourage more risk-taking by letting everyone know, hey, if something bad happens, we'll just print more money to cover you. And the brunt of the cost will go to taxpayers through higher inflation. Or if higher fees are imposed on the banks, there's nothing stopping them from just passing those fees on to us. This is a developing story. There are a lot of questions we're left with. I may or may not follow up with another video, but I will definitely follow up with a pinned comment after next week's Fed decision. It's going to be between March 21st and March 22nd. It's a very decisive moment in history as to whether or not the Fed continues to raise federal funds rate to combat inflation, or if they pause or stop altogether to cool the current situation.
The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, public mission, public mission, public mission.
Some high-level questions I have are, should the standards and requirements for banks with less than $250 billion be reevaluated? Why didn't the people who held accounts with SVB do more to ensure the amounts held over $250,000? If the Fed stops or pauses rate hikes, will they lose control of inflation, costing us more money? If the Fed continues, does it cause the system to break in other places? How did the Fed come to have so much power over our economy? Is this the end of turmoil, or are we just getting started? If you appreciate the content in this video, it will help me out a lot if you like and subscribe to bring you more content like this in the future. This is first and foremost an educational channel, and I will definitely keep it that way. I believe everyone deserves the knowledge that can help them reach financial freedom, especially in a system that favors the wealthy. Until next time, peace out.